Since the credit crunch, there has been noise in the market about a new method of finance, a noise that's getting louder. Crowdfunding, also referred to as peer-to-peer lending, has emerged over the last 2 or 3 years and is very much a child of our technological times. Everything is done online and without a bank in sight. It's not just that crowdfunding is a source of money, it is a quick source, with funds typically made available within 2 to 4 weeks. And with banks notoriously reluctant and slow to lend, the UK crowdfunding market is now worth millions and growing rapidly. Until quite recently, property investment businesses weren't major users of crowdfunding, but that is changing, with the likes of LendInvest, Funding Circle, CrowdProperty and LaunchPad all represented at the recent renewal of the Property Investor Show at London XL. LendInvest was spun out of bridging lender Montello last year. It exists specifically for residential and commercial mortgages and so far has completed nearly £28 million worth of loans, secured against properties worth nearly £44 million. Christian Faes highlighted some of the challenges facing the sector.
Probably one of the most challenging things for the whole sort of crowdfunding space, if you like, over the next couple of years is the fact that there's a lot of entrants in this space. There's a lot of people that are setting up crowdfunding platforms and peer-to-peer platforms. For us, we are a little bit different in the sense that we're an existing lending business. So we've been lending for a number of years. We've got certain processes in place and we effectively underwrite and assess a loan the same way as mainstream lenders would, the same as a bank would. So I think that's the exciting thing about our proposition, but at the same time it is something that is necessarily a challenge for the market in terms of ensuring that there's a certain quality of players that are in there so that at the end of the day investors' money is protected.
Simon Zutshi of CrowdProperty is a seasoned property investor who has long believed in the concept of using other people's money. He believes that crowdfunding platforms were the obvious next step for the property investment industry.
For me, I think being able to put money into a loan for a property is far more secure than lending money to an individual or even lend to a business, which may or may not work. After all, property is an asset that will never ever go to zero. There's always some inherent value, even if it's just the land. So I think there's less risk to it. And I think when we go public, I think people are going to be very interested in what we've got to offer.
Meanwhile, Jonathan DeCarteret, one of the names behind LaunchPad, has ambitious plans to attract property investors from around the world to fund residential and commercial developments in London, China, Dubai and the US, and is very positive about the outlook for the sector.
So crowdfunding allows many people to commit small amounts towards one single project, and for the first time in history it has been legalised by the FCA on April the 1st. Last year, crowdfunding generated £5.5 billion worth of investment capital, and this is set to grow exponentially by the World Bank until 2025.
As with other financial instruments, there are arguments both for and against crowdfunding, as John Corey, who chaired the panel debate at the show, points out.
Well, the positives for crowdfunding is it opens up alternative finance channels to borrowers, people that might have a good deal but don't quite have the full track record for a traditional lender. It also opens up the opportunity for savers to invest their money and get a pretty reasonable rate of return. On the downside, we had this whole thing with the credit crunch where we think bankers don't know what they're doing, and now we're going to let the actual crowd make decisions on what loans get funded. So I wonder if the crowd's going to be any smarter than the bankers.
Nevertheless, it is hard to ignore the statistics, and impressive statistics they are. According to think tank Nesta, the alternative finance market, which includes all types of crowdfunding, grew by 91% last year and could be worth over £12 billion a year in the very near future. What is not in doubt is that many respected commentators expect it to be a major feature on the property investment landscape in the years ahead. If so, expect it to remain a key topic of interest and business at this event for the foreseeable future. We'll leave the last word to Jooste.
I think it was very encouraging to see the level of engagement that people had in the crowdfunding discussion. Very good questions that came forward, and I think there's a very strong understanding of what crowdfunding is, and I think it's exciting to take that forward into the property finance markets.